Hello traders, this is Dave again with the Compass Options Live Trading Room, and this is the somewhat delayed weekly Periscope video. I spent the weekend putting out that video on the Compass dominated combo training. It took a little bit of time, so I thought I would go ahead and just put out a weekly Periscope video just to kind of go over some of our trades, where we stand, talk a little bit more about the using the dominated system in conjunction with the Compass system. I also want to point out that we're starting tomorrow, I believe, tomorrow being Tuesday, we're going to have a different SMS alert service. The previous one we've been having lots of problems with, should be starting out tomorrow. And if I do any alerts this week and you don't get any alert, because we're already setting it up, if you don't get an alert, just give him a buzz and let him know to add your cell phone to the new service, so that you won't miss out on those. Okay, so again, let's just kind of move forward here. We'll start with the usual disclaimer. All the signals and trading opportunities we provide here at the Compass Options Trading Room are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we are not going to be giving financial advice. All right, so I've kind of updated the weekly Periscope, the weekly trades. Got a lot of them on here. We've had some unbelievably good trades here, and it's been pretty stunning. I did from October 1st to November 7th, which was a Monday today. We've had 46 in the room. We've had 46 trades. Not all of them was SMS out, because we had SMS problems, and also because some of them were going to be too quick. But we've had 44 trades, 44 wins and 2 losses, so 44 out of 46 wins, and some small, some big, but that's still a 96.5% win rate, which is pretty stunning. And again, the Compass system and the dominated system together is really boosting it up here. We take a look at what we've done here. There's a call debit spread and ENPH. Just kind of want to look at that one. Look what we've done with call debit spreads: 28% on that call debit spread, 13% on the Tractor Supply call debit spread. And we had a call debit spread here on Alta that we did for 33%. And we had a call debit spread today on BNTX that we made 20% on in a pretty short period of time. And there's on Snow, we had a put debit spread. These are all debit spreads. We've had time spreads. We had 25% in DHR. We had TDOC. We had 26% on TDOC. We had 41% on HOOD on these time spreads. We had 25% in A, B, and B. And then we had a time spread on Intel that we went from anywhere from 20% profits to 30% losses. It depends on when you get out and if you get filled the first day or not, or whether you had to take it overnight. So that was kind of a mixed one. Some people lost on that, some people won on that. But overall, the trading has been really good. And again, we're just taking highest probability trade setups and focusing on those. So we had we got a really good break with this HSBC. That was a time spread too. I didn't put that in there, but that was a time spread that was basically dead to us. The first week on the short calls, we let those expire and we took the premium, and then we were waiting for HSBC to bounce up in case we could have made something on it. And basically on Thursday before the expiration, it was basically zero bid by 5 cents asked. So there was basically no bid to it. It was going to zero. And then HSBC gapped up the next morning. We had $27 calls. It was trading at 26. It shot up to 27.85. Anyway, we get in for 20 cents and out for 65 cents, a massive 225% gain on a time spread. And there was some luck involved in that. I mean, we were lucky that happened, but we'll take it because we've had them go the other way against us too. So that was a big win on that one. We've had some other really good wins here. Just looking for one we had that was in Snow. I'm not sure I have it on here. We had a Snow that produced about 100% profit. This Snow here, 75%, 75 to 110%, depends on where you get out. I try to be conservative on here on these. And again, you can see how many wins we've had here. And we had BNTX today for 20%, and we had Rig was a really another nice one. Where's Rig? Rig's in here somewhere, I think. Or maybe I didn't put it. Oh, here it is, Rig. Yeah, 15% on Rig. We held that. That was a cheap one. We get in for 65, out for 75. So again, lots and lots of really good trades here. 44 and 2. I don't, it's pretty hard to get over. Not if we can do 90%, that's spectacular. 95% in a month is really pretty extraordinary. And I know a lot of people in the room have been really doing well. So that's that rundown on that. Again, the highest probability trade setups we go over all the time. And one of the things we're adding to this highest probability trade setups is we want the market internals that come out of the dominator, we want those to line up. So if the market internals are green, for example, then we want to be looking for longs, and we want to be looking for longs that have the market internals chart, the ninja chart, and I'll show you that in a minute, that also has a bullish background, and vice versa on the shorts. So we look for stocks that break out of dynamic compression or bounce off of VWAP. I mean, there's several different support and resistance levels we can use, but the main one we like to look at is the dynamic compression zone. We look for Fibonacci reversal candles to identify a reversal trend that's confirmed. We're looking to break out in the same direction as the stock's current trend. So obviously we don't want to counter trend trade. When the stock is long, we want to take the stock long. We wait for a pullback and take it long. We don't want to counter trend trade and take a stock that's bearish and try to pick the bottom and go long. And we also want to trade in the same direction as the current market trend, if there is one. Today, for example, there was no really market trend until about the last hour and a half. It was just chop all day long. So you have to focus on the stocks with relative strength and relative weakness and use that. And of course, we want the modified Laguerre for the current time frame. In other words, the momentum indicator in Compass to match the trade direction. And so we want it to be blue or green for bullish, red or yellow for bearish. Same thing with the multi-time frame oscillator on the Laguerre. Again, that's showing us modified. That's showing us momentum for the multi-time frame. We want that to line up as well. We'd like to have the Bollinger Bands bandwidth expanding, which, as I always say, if it's breaking out of dynamic compression, they will be expanding. And we want to select stocks that have relative strength or relative weakness versus a SPY, because they are just by definition going to perform better than the market. And if it might be a swing trade, you want the daily chart to match the trade direction as well. And that's a good idea to take anyway. You really don't want to be getting any longs if you've got a bearish daily chart. It's much more difficult to hold it through the day, and it's obviously impossible to hold it overnight. And if we get a pop out of the box signal, that adds conviction. And again, we have patience. We're waiting for a compression break. We're going to reduce our risk substantially. So don't be rushed into trades. Don't think you have to take a trade. As I've said many times, our objective is not to make trades. Our objective is to make money. And what I'm trying to do is produce a room that everybody can use the Compass system and the Dominator system to produce high probability trades that we're going to give them a high win rate and make them profitable consistently. And we have to wait for these. So again, our objective is not to make trades. Our objective is to make money. And with I haven't had time to put up a lot of new charts. So for anybody new, I'm just kind of showing this is a chart of Z that we took short. And you can see this pop out of the box signal right here. This is telling us that we're breaking out of a compression to the downside. This is where we entered, and you notice all of the Compass indicators are red on this, and the stock moves down, kind of compresses here. We get out right here. We're losing, you can see we're losing momentum right here as the candlesticks get smaller and smaller. Now, this was Oxy. This was a day trade we took, but this was the daily chart that we took it off of. So you see the big candle here on Oxy, and see how green everything is here, and it's breaking out of a dynamic compression zone, which is this shaded area right here, popped up. And again, here it was on the 5-minute, the day we get in, we took it right here as it broke out of a dynamic compression zone, and everything was green or blue, and we rode that up until we get to this red candle right here. And then we took profits. Tesla, this is one I like to keep up here because this is kind of a classic. This was coming out of a dynamic compression zone. You see the shaded area here. You notice that all of the Compass indicators are green here. And this is a Heikin-Achi candles. So what you see here is, as the stock breaks out of the dynamic compression zone, you've got these dots in the middle. These are acceleration dots. These are telling you that the current time frame Laguerre right here is pinned at 100. This is highest. That's the highest momentum that we're able to measure with the Laguerre. So as the stock starts to move up and you get these acceleration dots, these Heikin-Achi candles keep putting flat bottoms in. Every candle on a Heikin-Achi that has a flat bottom is in the trend. Those are all bullish, and it just kept moving up, moving up, moving up, moving up, and then we start to get some wicks and tails and a good place to exit right here. And again, you had a pop out of the box signal right here and a breakout of dynamic compression and all green. So just a really, really good trade. This was a short on the SPY that I just keep up here just to kind of show you what the Bollinger Bandwidth looks like. This is what the Bollinger Bandwidth looks like on TOS if you put it on your chart. I don't put it on the regular compass chart because it makes it just too busy. But as you can see, and these are Heikin-Achi, as the SPY starts putting in a flat top, which is a bearish Heikin-Achi reversal, we have a wick and then a flat top. That's a Heikin-Achi reversal, telling you that you're in a bearish, you reversed into a bearish trend, and this candle confirms that. And you notice that the bandwidth is moving up during that time. And we get flat top, flat top, flat top, flat top, flat top, flat top, flat top. So this is how you can just stay in the trade. And then when you start getting the wicks and tails again, you take your profits. And you notice the bandwidth expansion is starting to wane. So the bandwidth is coming in to start to compress again after this breakout. And one other SPY trade right here. This came out of a dynamic compression zone. You notice it broke below the VWAP. This pink line is a VWAP. That's one of the ones we use for an entry level if we're trying to get short. In this case, once the stock breaks below the VWAP, we can get in. And again, we had a flat top candle on that break. That's a bearish reversal on the Heikin-Achi, and we just follow it down. Again, you see everything is yellow or red. You just follow it down, and then when you start getting the flat candles right here, the candles that are much smaller, when you go from big candles to little candles, that means your momentum is starting to wane, so you would get out anywhere in here. And obviously you can see the current time frame Laguerre, or the momentum indicator here, turned blue, telling you that there was some buying coming in. So we're going to be out right in here. We're not going to be any longer than that. Now, this was Meta. This was a really good trade we had as well. And this was the daily chart of Meta, and we took this overnight. You notice it comes screaming down out of this dynamic compression zone right here, and pops below the dynamic compression zone, gaps down, gaps down, gaps down. And we took it overnight. I forget exactly which day, but it was a beautiful win for us. And again, there'd be no reason to try to take this long. This was a short setup. Everything's red or yellow. Very, very nice trade. Before we get on to the dominator, I want to show this is the daily chart of the SPY, and you can see we've had a yearly low right here. We keep putting in lower lows. So this was a yearly low on the SPY, and then we bounced back up as we did over here. We bounced back up right to the 50-day, right to the 100-day, bounced off the 100-day a couple times. It failed at the 100, came back through the 50, went back up to the 50, and then popped up through the 50 today. So what's going to happen from here? Well, we don't have any idea. Is it going to move back up through the 100-day, move to the 200-day? No clue. So we've got to watch and see what happens. But so far, we're still in a bear market all year. So we have to for the current time, we have to assume that we're staying in the bear market, and this is likely to roll over at some point. But you don't know how high up it could go up. I mean, in the past, it's gone up all the way back up to the 200-day moving average before it rolled over again. So what we're waiting for is we're waiting for the market to actually put in a higher low. It keeps putting in lower lows. Every time it goes down off of one of these rallies, it produces a low that was lower than the previous one, and it produces a high that was lower than the previous one. So when you're getting a lower low and a lower high, that's the definition of a downtrending market. So we'll see where we go from here. We're just kind of watching it tomorrow and see. And we had a pretty good rally late in the day in the market today. The last hour and a half or so, it rallied up nicely. Okay, let's talk a little bit about the dominator system and how we use this in conjunction with the compass. And again, I put that whole video out on that that you should have got today. And it goes into more detail how we use the compass system and the dominator system together. But I just want you to see that the dominator systems on the Ninja platform. This is a Ninja platform, which you have to trade the dominator system. But you don't have to pay for Ninja. If you're not trading off a Ninja, it's free. But you do need a kinetic data feed to get the market internals, because the market internals are being fed by kinetic into Ninja, and then the dominator system is then looking at that data and doing its calculations. So the couple of things to be obviously, the couple of things you need to be aware of. The background color on any chart that you pull up, this is a SPY. The background color is going to tell you whether the stock is neutral, bullish, or bearish. In this particular case, on the SPY of this particular day, we had it here was neutral, and then it started to go bearish. This is a lightish yellow, or you got lightest pink. This tells you that the stock is bearish. Now, once the stock turns to bearish, you notice that the sell signals, these red arrows, start to show up on the stock. You notice they didn't show up over here when the background was neutral. They're only showing up on the background when it's a bearish background. So this would be like an entry for you right here, and you could have written it down here and then get out here and get profits. But the background is going to tell you whether the stock is bullish or bearish. These are the lines that represent the actual market internals. Now, the market internals are made up of the 5 indexes: the Dow, the New York Stock Exchange, the Qs, which is the NASDAQ, the SPY, the S&P 500, and the Russell 2000. So there's 2,600 stocks, 2,700 stocks in that group. And this is looking at each one of those indexes and looking at number of stocks moving up on up volume and upticks versus number of stocks moving down on down volume and down ticks. So when you get, for example, all red here on all the indexes, that means a huge majority of the stocks are moving down on down volume and down ticks, as opposed to moving up. So you're going to get these signals when the disparity is large enough. For example, 300 to 100, or 400 to 100, or 500 to 75, or 800 moving down and 200 moving up. It gives you a huge disparity in that. Now, it's not looking at price. It's just looking at the number of stocks, which is what market internals are. And you can't get that anywhere except from kinetic feed into Ninja. You can't get it in TD Ameritrade. You can't get it in Scotch. You can't get it in Fidelity. You can't get it in any other platform. So that's why we're using Ninja to do this. Okay, so there's your market internals, which is going to be either black for neutral, red for bearish, and green for bullish. When it's neutral, it just means that the number of buyers and the number of stocks moving up, number of stocks moving down are pretty well balanced. Okay, now here's the opposite. This is a green. Now again, black background here, neutral, goes to a lightish green or a bluish, light blue background here, and you notice when all of the market internals here went green all at one time, and we got a buy signal right here because we came out of a neutral background and we went into a bullish background. So we get a buy signal right here off the 15. Perfect entry spot. And you've got massive amounts of stocks moving up versus stocks moving down. So this is going to give you a very good indication that this stock and this the market's going to be heading up, and this stock is especially bullish. So you would want to be taking longs in this stock. And you see they kept putting buy signals out all day long. I mean, you could have got in this and get out, get in and get out, but you could have stayed in it all day, and it continued on up because the market internals basically were green almost all day long. And this is what a trending market looks like. Trending market looks like the market internals get to be one color, and you get some variations every now and then on some of the indexes, but generally speaking, it's all red or all green for an extended period of time. And that's a trending day. And these are the days where you can really stay in a trade longer. You can take a larger size, and you can you scale out of the trade. And again, what you'd be looking for is, if you were looking at the stock, you see the market internals are green, you'd be looking at your stocks to see which ones you want to trade. Obviously, if you bring them up on Ninja, you're going to see whether the background matches, and it should. If the background matches and you get a buy signal, then what you're going to do is look at it on the compass system and see if you're close to like a breakout of a dynamic compression zone or a bounce out of a VWAP. In other words, are you near a support level where you can get long? And that's how you use these two in combination with each other. And here's another one. Again, this was Netflix. Again, you can see this when the market internals go green, you get a buy signal right here, and you just get buy signals all day long on that trade. It just keeps moving up. Obviously, they don't go up straight lines, but you know, on the compass system, if you looked at this, you may have a pullback here. It might have pulled back to a dynamic compression zone, might have pulled back to a VWAP. As soon as it bounced off of that, you can enter right there and get in and ride that up. And again, this is a trending day. Very easy to see. So what you're looking at here is for the compass dominator combination. You're looking for example, a bullish setup. The dominator background is going to be green, light green or dark green. On your stock, you want that to be green or light green or dark green, and you want dominator buy signals. So when you've got a green background and a buy signal, that's telling you that you have a stock that's got an uptrend, multi-time frame uptrend, and you've got dominator buy signals telling you that the market internals are bullish. So you're joining a stock that is bullish on the multi-time frame trend, and you're joining in when the market internals are also bullish. That's why you've got the buy signal. And just the opposite, of course, for bearish. Dominated background would be pink or red, and you get a sell signal. Those would be stocks to short. And again, when you have a matchup like that, when you've got the dominator system and the compass system matched up, in other words, when you look at these, the compass system obviously has to have the compass indicators also green. In this case, also they would need to be red. But you can take largest trade size on these lineup because the probability of success is really astronomically high, and you can stay in the trades longer, especially if you've got a trending market. You have to always take the market into consideration. If the market is choppy, then you don't really want to be taking large size, no matter what, because you don't know how long this trend is going to last. And you also want to take profits much sooner. But when you have a trending market that's trending for hours on end, you can take larger size, you can stay in the trade longer, you can even scale out. You can take multiple contracts and scale out. And we're always looking for the best entry levels for trades when the dominator aligns. And that would be our highest probability trade setups. We're looking for like a bounce off the 15 EMA, a bounce off the VWAP, perhaps a bounce off of the white pivot line if that's there, and a breakout of dynamic compression. And again, you're going to be looking with stocks with relative strength and relative weakness to the SPY. So those are going to be give you even a better performance. And I'm going to skip this quick credit spread. I'm there every week. So that's pretty much what we're going to do. I did put out some bullish stocks for Tuesday morning and some bearish stocks for Tuesday morning. You never know with these things. You put them out. This is what they look like. They look good tonight. If they work tomorrow morning, it'll be great. I'll be looking at them in the market open to see how they do. But again, what you're looking for is if you're looking for longs, you want them to break over today's high, and you want the trade setup to be a high probability trade setup. And if you're looking for shorts, you want them to break below Monday's low with a high probability trade setup. And you also want to take trades that are trending with the market if there is a trend in the market. If the market's up tomorrow, you want to go to your longs. If it's breaking to the downside, it looks like it's trending down, then you want to go with your shorts. So that's the video for today. And again, we've been having some really great trades. A lot of people in the room really doing well. I get lots of feedback every day from folks that are finding trades on their own, making really good money on these things, and that's really gratifying. And I think being able to use the compass system and the dominator system together is really important. And hopefully you've got at least the compass system. And I do use the dominator system in the room and share it with the room to add some value to the room, so folks who don't have it or can't afford the kinetic data feed will get the advantage of being able to use it. And again, we're going to be doing a new SMS alert service. So if you don't get an SMS alert this week when I put them out, and I'll note in the room when I'm doing that, then you need to call Rory and make sure he's got your proper cell number, so you'll be receiving those SMS alerts. So again, thank you very much, everybody, for listening, and we'll see everybody tomorrow morning for another successful day of trading, and have a great evening.